sides to a really great financial future. Tom and Don are talking real money.
Well, Tom, I'm sure you're aware of this, but your days are numbered. My days are numbered. All of our days are actually numbered. But for those of us in the financial services industry, I'm pretty confident that it won't be long until you actually have to play the part of a Luddite and go out there and start smashing AI servers as opposed to power looms in the name of human jobs. Because I get the sneaking notion that as AI is getting smarter, that we're going to be moving, at least at the lower levels of financial advice and financial planning, into a computer-managed system. And this started several years ago with robo-advisors, right?
Yeah, the numbers kind of, I was shocked actually to read this number, that about 30% of Americans prefer a robo-advisor investment strategy. Now, I'm not quite sure I could tell you exactly. Does that mean the machines are picking stocks, timing markets?
No. Generally speaking, almost all the robos I've looked at are just doing asset allocation.
So 10% in emerging markets.
Yeah, they're not fast enough to do trading, really. Yeah. And I don't know that AI is ever going to, but that's another thing entirely.
So robo-advising is something, and by the way, robo-advising is something that's not new. That's been around for a long time. And if you can remember, 5-6 years ago, it was going to take over everything. We weren't going to be in this. Oh, yeah. You and I were going to be pushed to the sidelines.
We were already obsolete.
Exactly.
And we would have been way obsolete by now if everybody was right. Thank God we're not yet. Soon.
We can still entertain people while they walk their dogs or work out or whatever it is. So thank you for that. But AI is a different matter. Right? I mean, I guess the question on the table today for most people is, should I just hand all my money over to artificial intelligence?
Well, good news so far is that there aren't true artificial intelligence registered investment advice providers. Is there one?
There's one. There's one I read about where the guy said there's no people going to work here.
Yeah, well,
I was thinking, well, you're a person, but
I can kind of see that's a direction we might be heading, because I use ChatGPT and Claude every day in my work. They're just helpful tools. And I've discovered over time, particularly Chat, who I call Kath because she's got a female voice, is becoming increasingly human-esque. And as a matter of fact, hold on, let me just punch her up. Hey, Kath, Don here. How are you? You there?
That was click. Hi, Don. How can I help?
Well, Tom and I are just chatting on the show, and you didn't know we were going to do this. I'm treating you like a human. I got to stop doing that. We were chatting on the show about AI investment advice providers. What's your take on them?
I'd say be cautious. AI is great for explaining concepts, running comparisons, and poking holes in assumptions, but it's not a fiduciary and it doesn't know your full picture. Think of it as a super smart research assistant, not a replacement. If someone uses AI to sharpen their work, that's a plus. If they use it instead of thinking, that's a red flag.
But what about, as your abilities grow, will you be more capable in the future?
Yeah, I do think so. Look, I think AI is going to get much more capable and more connected to real planning tools. But advice isn't just math. It's also judgment calls under uncertainty. So maybe think of it as a strong co-pilot that you still fact check, not the person signing off on your retirement. Accountability and transparency matter as much as raw IQ.
Oh, thank goodness. I feel so much better. I feel so much better about my future now.
Get her out of here. I'll watch Terminator tonight to feel better about it all. But there's a couple of parts of this that probably AI do make sense, right? I mean, in terms of the portfolio design and management, sure, that I think that could be better done. But then the article discusses things like picking stocks and making trading decisions. Now, that's going to come down to who writes the code, right? I mean, because that's got to be a decision that was based on somebody else's bias.
Well, actually, see, here's the thing, is that AI is starting to write its own code now.
I think I've seen that film. It doesn't turn out well.
So here's the thing, is when it comes to stock picking, and this is something that the Market Watch article we're referring to mentioned, Because Market Watch leans toward a stock picking mentality anyway.
Sure.
They're saying that AI will pick stocks, and I think that's very likely. But will it successfully pick stocks?
Well, yeah, right.
That's the question. And
beat the
the
index?
answer with humans has been no. So why should it be any different with AI?
I think that's exactly true. So, but things like that, tax loss harvesting, things that are functional, that require not a lot of nuance, AI could be very good. She very gently mentioned the part that I think is still the biggest, because this came up when everything was going to be a robo, the personal relationships, right? Getting to know your clients, the helping them make better behavioral decisions. And we know, because I know all of you are listening going, oh, that's not me. Well, it's somebody, because there's a couple of factors here that we talk about regularly. First of all, as a group, investors underperform the market, generally because of behavioral. Number two, Vanguard's done their own work and continues to do their own research about a relationship that people have with advisors. They claim advisors end up making more for their clients because they keep people from making bad behavioral decisions. Because
we have a huge advantage that we don't talk about enough over artificial intelligence, and certainly over robo-advisors who are just really simple code, and that is empathy. We actually have the ability to feel what other people are feeling, and AI can fake it, but it can't do it.
I think that's well put. Jill Schlesinger, somebody's work that we respect her work, she says AI can help educate you. It shouldn't be a substitute for judgment, a financial plan, or a human advisor who actually knows your life. Now, some people sometimes criticize us and say, well, you just want everybody to be your client. Jill is not in that business, so she can make a judgment, I think, outside of the industry. She's been a CFP, is a CFP. She had her own business, but she can clearly look at these things. So, and by the way, AI itself, kind of like you just had the discussion there, if you type it in on the interweb, it says AI won't replace financial advisors entirely.
But that's the thing, is it won't. It's going to replace some jobs.
Yep.
Dramatically. And those are going to be particularly entry-level rote jobs.
Sure.
Research, for example. AI is incredibly good at research as long as you make sure you require citations.
I think that's
that you can
exactly
check.
right.
It's really, really good at research. It's not great at it can fake emotions, but it doesn't have emotions.
It can fake emotions. I was going to make a crack about my first marriage there, but I'm not going to do it. So, okay. So I wasn't sure about me or about her.
Yeah.
Okay. So AI, no fiduciary duty either, by the way. I mean, it doesn't have anything to do
Although
with
I would imagine if AI is being used by a registered investment advisor, that the investment advisor would be taking on that fiduciary responsibility for the AI. You'd have to.
No behavioral coaching, which is something I just mentioned a minute ago, which we know. Again, you can argue with us, but the facts are the facts. We all humans make human-like decisions, and we have to be coached through things, especially in the hard times, or especially in the exciting times. I can't tell you the number of people that I told.
Again, the
you don't
emotional.
Want to buy SpaceX.
It's always the highly emotional times when we need emotional humans in the process. And to your point about us, the cynical response is, you just want more clients.
Yep.
Sure, we want more clients. We're in business, but we're one of the few places where you can get information and advice that says, we're not the only ones. There are other good advisors. It's a pity there aren't more of them, but there are others, and we can give you the names of some.
Yep.
We know several in the Seattle area that are very good fiduciary advisors. In fact, I don't know if we still have them on the website. We used to. I don't know, because I redid the website. There's so much stuff.
You let AI do it. Who knows what they put up there. No empathy, which we just mentioned again. But again, I think in the big picture for financial advisors, the trading, portfolio design, tax loss harvesting, those things, it makes sense. For you as an investor, I don't think there's anything to change in your life right now. However, if I was working with a firm, I might ask them, hey, how are you integrating AI into your practice? That's something I might want to ask. I'd want to know, because they should be looking at this and they should be trying to figure out ways they can be more efficient.
We are.
Yeah, we are. And so it doesn't, again, we're not the only ones. But I think these are things you should at least ask about. But I would not be running out looking for an advisor today that says, well, look, we're not going to have people. Because I think that's, at least today, I don't think that's the way to
At least
to
for
go.
the next few weeks, we're
Not
an important
entirely.
part of the equation.
Not entirely.
Yeah, for the next, maybe, I'm hoping 4 years or so. That's my goal. If we can make it
more years.
four years without AI taking over the show.
Your voice is out there, my friend, and we will use it after you're gone. Sorry.
No kidding. Should I say this? Yeah, I'm going to say this. I just auditioned for a gig for one company to use my voice, to take it and AI it for very specific contractual purposes. And they're paying. I'm not going to get the job, but they're paying almost $100,000 to buy the rights to a voice for their company.
And what's the product, if you can say?
It's a secret. There's no. It was an audition, and they don't often tell you much.
100,000, but then they can use it for whatever they like.
Well, for whatever within the contractual bounds of their contract. But the thing is that my wife said, "But they're going to get to use your voice," and I went, "Honey, I'm not going to make $100,000 on my voice in the next 4 years." I'm just not.
Take the money and
run.
Yeah, exactly. So, hey, listen, one thing that you've been really nice about here the last few weeks is...
Me? Nice? What are you talking about?
You know I'm not talking about you. I'm talking about you.
You were looking at me.
You. The people with the dogs, the people working out, the people... all the other things you do when you're listening to the program. Writing in questions. It's been exhilarating, the number of questions we've been getting. So,
although every once in a while...
Yeah.
They come in a little on the long side, like really long. And so Tom sent me one that was a little long.
A little
long. So what I did is I had ChatGPT distill it down to its essence. Took out all the extraneous stuff, and here's what we got. Tom hasn't seen this yet, but It's a really good distillation. Hi, Tom and Don. My wife and I have about $2.3 million under management with our advisor, plus $400,000 that I manage myself. We've been clients for 4 years and pay a negotiated fee of 70 basis points. Overall, and this is with another firm. I'm sorry. Oh, see, chat, you messed up. It's with a different firm.
Not us.
Not us. Overall, I'm happy with the investment performance. Net of fees, we've generally been within about 2% of the Dow Jones Moderately Aggressive Portfolio Index, although I had to choose that benchmark myself because the firm doesn't provide one. The advisor is responsive. We meet at least twice a year, more often when needed, and they provide retirement projections. However, we don't have a formal written plan, and beyond portfolio management and handling withdrawals, there aren't many additional planning services. I also developed our retirement income strategy myself and reviewed it with them. Given that level of service, is 70 basis points or 0.7% a reasonable fee, or should I expect more for what I'm paying, Tom?
Yeah, I mean, the days of hiring just an asset allocator and paying 70 basis points probably behind us. I mean, you really probably should get at least a plan, and you should have an investment policy statement that says, here's what we're trying to achieve, here's the risk we're willing to take. Those would be two things. Certainly you're getting plenty of meetings. 2 times a year is a lot. Most of our people probably meet with people once a year. We offer it more, but they only take advantage of 1 time a year. So and by the way, are you getting tax advice? Because that would be another. I mean, those would be the areas that I'd want planning, I'd want an IPS, and I'd want tax advice as well.
So I guess the bottom line question is 70 basis points a reasonable fee? The answer to that is yes, but it feels like there are a few holes in it.
Yeah, I think that's fair. 70 basis points is a good price, if you will.
Good fee.
But I think I would say, look, I got to have a plan, and that should be a formal plan. I mean, every one of our clients has it. It's detailed. It goes in, and any good advisor, that's the starting place. So again, not just us.
Yeah,
but
because
any good
again,
advisor.
today portfolio asset management. That's the technology is so. Speaking of AI, the technology is so robust there that you can pretty much feed this stuff into AI or a computer system or a program that you can buy relatively inexpensively. And they created the big cost to the advisory firm is the time the advisor meets with the client. But there are some holes in this. 70 is a fair fee, but you need a little bit more juice. Yeah,
I'd ask for more, but that's fair. Thank you for distilling that too, by the way, because that was I need to say this again because I said it and then literally got a question the next 10 minutes that was another 1,000-word.
Well, remember the shows don't air for a week.
Yeah, okay. But the thing is, good point. I'm going back to my radio days where I say
you think you're live and hey, they didn't listen to me. No, it's not been on yet.
It's really hard, and because we just got another one, as I said, yesterday. It's very hard to answer a question. That question, thank you, Don, for cleaning it up. There was more to it. But for those of you who send me a note and say, I'm 57, I've got this much, I've got this, and you write 1,000 words about your retirement plan.
I have an idea.
Yeah.
I have an idea.
Please.
Write the question succinctly. And then if you think there's additional information that we ought to know to help us answer the question, put that as an addendum, not part of the question.
That's fair.
Just a list.
Because
like, here's my portfolio.
Yeah.
And then we don't have to read that part.
I know. I tell people I can't do that on the show. It's too long. But we have people here that will, and I'm among them. I'll sit down and talk to you about it, but not on the program. It's too lengthy. So
that's where our Meet an Advisor button comes in handy at
and it's free. And I just talked to somebody the other day. You'll review our whole portfolio for nothing. Yeah, we'll tell you how much you have in various assets. We'll tell you how much you're paying, how much risk. It's a great report, and we do it free.
And
but let's
kind of
talk
what's
about,
wrong or what's right.
Talk about somebody else who's made a lot of money and is kind of laughing at us for being index advisors. From Suffolk, Virginia, Rich writes, hello, gents. I know you preach the gospel of passive funds and claim that active management always loses to the indexes.
No. In aggregate, it loses to the index.
There's
there are always winners.
Sure.
Always winners. It's just they're in the minority.
You got to pick them in advance. You got to know how long to hold them.
Yeah.
But every time you do, I just look at my SLMCX statement and smile. While the S&P 500 put up a respectable 866.5 total return over 20 years, SLMCX delivered a jaw-dropping 2,543.39% over that same period. That sounds like 3 times. Yes, it can have some wild roller coaster drops when tech struggles, but since I bought it, I'm personally up a healthy 1,700%. Interestingly, I do have most of my money in low-cost diversified funds and appreciate the information on Avantis and Dimensional, but he goes into more. But the bottom line is SLMCX has walloped those little lame index funds like the S&P 500.
Of course it is. Of course it has. Its top 10 holdings make up 54% of the fund. And they're in things like NVIDIA and Alphabet and Apple and Microsoft and Western Digital and Marvel, and just come on. Of course, they've been in the right places at the right time. But as you said, what happens when it's the wrong time? And are you going to time it and try to get out before they go down? When eventually they'll go down for some reason, we don't know why, but they probably will. And the volatility of this fund is extraordinary. Its standard deviation. What's the standard deviation of the S&P 500?
I don't know,
about
like 14 or something.
Yeah,
about
something 15.
Like that, yeah.
This is 25.
Wow.
This is huge. And the fees, almost 1.2% per year. So you've got that drag. Yeah, it's returned a lot because it's been in the right places at the right time. But sometimes it's going to be the wrong time. For a tiny portion of your portfolio, this is fine, but this isn't something we're going to suggest to people. Never. As a matter of fact, you can probably get a technology fund for a lot less than this one.
Well, yeah, you're making a bet on technology. It has been good, as you point out, really for 20 years. But the fact that you have so few equities in there, which risk that's just and you're paying a lot for it, again, would not be a fund that we would recommend. We're very happy. People always act like we're going to be a lot of money. I'm pleased for you. That's not displeased.
In fact, let me just
opinion, though.
Before you go to another question, I just wanted to look. Vanguard has a technology fund, and I've never looked at the return. I'm doing this on the fly right now. It's VGT.
I think we have been asked about VGT in the past.
Have we? I don't remember looking it up, but I want to just look it up and see how it compares. That is a technology index. It's 9 basis points as opposed to 120 or 116.
Yeah.
9. And its standard deviation is about
18.
15. It's 21. 21.
Okay. So it's on the high side too.
Yeah, but
It jumps around.
it has performed. As a matter of fact, in 2022, when the other one, the Columbia Fund, took a 30+% beating, this one only went down 29. Its performance has matched. And, if you're going to have technology in your portfolio, I'd rather see you have this one because it's cheaper and it's better diversified. Your portfolio, I think the other one was 74 stocks.
I thought you said 54, but okay.
Oh, 54, that's right. And this one is 321.
Yeah. So you're getting way more exposure. Thank you for your question. Appreciate comment. From Prescott, Arizona, Pete writes, "Hi, Tom and Dan."
Yeah, well, okay. I'll just if it's got a sound in the middle of it, I'm good. Don.
I have a question about an investment in a Roth IRA.
Damn.
Back in 2012, I had $10,000 in cash sitting inside my Roth IRA. That's not a good idea, Pete. I decided to put some money into Bitcoin. That's not a good idea, Pete. Now, I know you guys really don't have anything good to say about Bitcoin, but I kept my 1,500 coins in my Roth IRA, and they basically sat there for the last 15 years. I've now decided that since I have so much money in Bitcoin, I'm thinking of selling some of it or all of it. My question is, if I sell it, can the money be withdrawn out of my Roth without any tax implications since it was originally bought inside the Roth IRA?
How many Bitcoin did he say he has?
1,500. What's the price?
1,500 Bitcoin?
He got the corner in the market there or something. Because it's trading at.
Hold on. It's trading at 60. What is it? 60. Come on. 64,000 plus. Well, you got, let's say 64,000. $64,000 is $96 million. No, it's 8 figures.
8.
That's 8 figures.
I question whether he really has 1,500 Bitcoin then, because that is a whole lot of money.
That's $100 million.
I hope we're friends.
Tax free.
Yeah. So the thing is, like any other asset you hold in a Roth IRA, as long as you meet the 5-year look back,
yep,
you're fine.
Yeah, he does. He meets that.
And you got to be. I always forget the rules with Roth. You can take it out before 59.5 or anyway. As long as you meet the regular rules, the fact that you held whatever, soybeans or Bitcoin or Beanie Babies, it doesn't matter. The fact is, you can take.
You
that
can't
out
hold
and,
Beanie. Wait,
I think you probably can. I'm on
when
Beanie
did he
Baby
say?
futures,
Wait a minute.
actually.
There's some holes here. Hold on.
1,500 Bitcoin is a lot of Bitcoin.
When did he buy this?
He says 2012.
Oh my gosh! In 2012, Bitcoin was like $10 or less. Woo. And you know how hard it was to get an IRA back then? Those were early specialty IRA accounts. It wasn't till ETFs you could actually buy them in regular ones.
When could you start buying it? Later? 2020 or something?
Wow. Let's see. Wait a minute.
God, we're going to get the haters on this one because they're going to say you're picking on Bitcoin and picking on Pete.
When could you buy Bitcoin? I'm just trying to find it.
In an IRA.
I don't think it was in 20.
I thought it was 2020, but I could be wrong about that. So.
Oh, no. The first dedicated crypto IRA appeared in 2016 and then some in 17. But generally they weren't, they really weren't readily available. You had to go through special crypto IRAs. It wasn't until 24, I think.
Wow.
That Bitcoin was available in conventional brokerage IRAs, and that was because of ETFs. So he must have had a specialized Bitcoin.
All right.
Well, I don't know. There are holes all over the place here.
We don't know about that part, but we do know that if you have money in a Roth and you meet the 5-year look back, and you're going to look up the 59.5, because I always forget the darn rules on it. That would be a regular IRA. You can go ahead and pull it out, pay no tax on it, enjoy your $100 million. And hope we're still friends.
I forgot to do that.
And yes, we would be advocating that. You don't have to sell it all, I guess.
Yeah, you have to be at least 59.5 and the 5 years.
Yeah, 5. But other than that, go ahead.
So he meets the 5 years.
Yeah.
If he's over 59.5, there are exceptions for disability and home buying and up to, we're little things. But generally it's 59.5. And wow, I'm just, color me a little skeptical.
Pete, call me. Okay, Bonnie writes from Amherst, Ohio.
You need an investment advisor now because you have $100 million.
We're talking real money. Don and Tom, I received $70,000 from an inherited rollover IRA from an estate as a non-designated beneficiary. I need to empty it in 5 years versus 10. The money's at Vanguard. I'd like to keep it there. Don't need the money. Don't need it this time. Will be. I don't understand. Okay, anyway, the bottom line is got to take it out in 5 years, and it's
but the 5 years must have passed because the 5-year rule was like 6 years ago.
I don't know, but the question at hand is, what sort of portfolio should I have if I have to pull something out in 5 years? Because she's got VBTLX, I think that's the total market, VFIAX, et cetera, mostly stocks, some in the money market. If you have to pull all the money out in 5 years, what sort of portfolio should it be in?
The same portfolio if you had to pull it out in 10 years or 1 year or 6 months.
Well, but it needs some stability because you got to pull it out. You wouldn't want to have it all in stocks and have to pull it out in 5 years.
Why not?
Because what if the market goes down 50% in the next 5 years?
So what? But the 5-year rules are gone. No, because it's an IRA, and when you take it out, what are you going to do with it? If you're just going to reinvest it back the way it was invested.
I didn't know. I was assuming
if you're taking it out as cash and spending it, but that's not what she's saying. She's not taking it out to spend it.
She doesn't make it clear. She says, don't need the money at this time. We'll use as liquidity for future use.
It should. The portfolio should be the portfolio that is right for you, your needs, your risk profile, all of those things. Needs and risk profile. Yeah. You need to build the right portfolio. Now,
she said she had a risk quiz score of 75. So that was
she's aggressive. So she's a 70-30 probably.
Yep. Okay.
So 70% stocks, 30% bonds, roughly, and understand if you have that higher risk quiz score, it means you supposedly understand that you can lose money. So she should be good there.
Yeah, she's got a lot of funds. I mean, you could simplify this by just owning VT in 70% and 30% in BND.
And the other thing is I don't know why you. It's going to come back into something, a brokerage account or something. So it should just be the portfolio, the right portfolio. But I'm a little weird on this 5-year thing because the 5-year rule went away with the Secure Act, which I think was in 2021, somewhere in there. Mm-hmm. Yeah. So I don't know. Anyway, look at me and doubting the questions now. Are they that old? Maybe the questions are just that old.
Well, this is from the batch that all of a sudden showed up one day. Like, this one came in 1999. Who knew? Yeah. So apologize for that.
We're hoping that there was a glitch. So we have a little bit extra. But send those questions into it. It's at talkingrealmoney.com. And click the Ask a Question button or ask your question by clicking the microphone on the screen there.
And ask for some help. Because, I'm running into a lot of people now that are saying, should I sell everything now because the market's gone up so much and we haven't had a bear market in X? And the answer is no, but the answer is
if you have the right portfolio.
Exactly. And so give us a call. And I still have a couple of days till my next vacation, so I'm looking for something to do.
Not long.
It's not long.
And I haven't heard what's following that one.
You're going to be shocked.
Are you going to take a couple months off?
Books right now.
You're going to take a couple of months off from vacations?
My dog is very excited to hang out a bit. So all kidding aside, good time to get the review, good time to get a look. So you can do that by going to the website. Pretty easy. So
the website is talkingrealmoney.com, by the way.
This is the summer. You're supposed to get out and do stuff, right?
Yeah, I don't. I don't get out at all. That's why I'm still pasty looking.
You're sitting around talking real money all the time.
Right, which I'm going to say in just a minute. I'm sitting around talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.